Hello, you're welcome to today's section of our stock analysis. Now, in this video, I will show you two stocks to hold for the next quarter. Two important stocks to hold for the next quarter, especially if you are an investor that is interested in the foreign stock market. Two foreign stocks to hold in the next quarter. Now, one of them is Adobe. If you have your PDFs, your Adobe learning platforms, you know Adobe. And then the next one is AMT. We'll be doing a deep dive to these two stocks briefly. So we can be able to know how investors are positioning with this particular stock and how we can take advantage of these two stocks as well in the next quarter. So let's dive into Adobe. For Adobe, the acronym is ADOB. Now, the current price is 347 USD as of today, 15th of September. Now, let's look at the three important things. But before we do that, like I've always explained to my inner clients and students, I said we can use the 52 weeks high and 52 weeks low to explain if a price is cheap or overvalued. By the way, if you have followed me from January till now, it is this same strategy I used to pinpoint the profit return that Alibaba will be producing. And as we are talking today, Alibaba is currently at a 52 weeks high with a massive gain of over 200% from January till now. But let's focus on Adobe. Now, check around. You see the Alibaba video. Check around and go check it out. Now, for the 52 weeks high and 52 weeks low for Adobe, 52 weeks, you can see the 52 weeks low is $330, and then the 52 weeks high is $557. Now, let's do something quickly. We want to find out the average, the mean for these two prices. So let's take our calculator and press 557.90 plus 330.04. Divide by 2, the average is 443. Now, currently, the price is currently at where? 347. What does that tell us? In relation to the average, price is still very cheap. If price is above this 443.97, then we can say price is expensive in comparison to the 52 weeks high and 52 weeks low. You get that trick? Yes. Okay. Now, so let's go to the fundamentals. So we can take a look at how this stock is performing critically from their revenue, from their book, from the cash free flow, from the management, if they're having any debt issue. So we want to be able to know and ascertain if this is a good investment opportunities for us. Like I said, the price is currently at 358. So first, we want to be able to find out what exactly does this company represent. So we want to check the about. You see, Adobe, formerly Adobe Systems Incorporated, is an American multinational software company based in San Jose, California. It offers a wide range of programs for web design tools, photo manipulation and vector creation through to video, audio editing, mobile app development, print layout, animation software. It has historically specialized in software for the creation and publication of a wide range of content, including graphics, photography, illustration, animation, multimedia, video, motion, pictures, and print. Its flagship product includes Adobe Photoshop image editing software, Adobe Illustrator vector-based illustration software, Adobe Acrobat Reader, and portable document format, and a host of others, primarily for audio-visual content creation, editing, and publishing. Full stop. Now, that gives us a bit of what they do as a company. So we want to ascertain if they're making profit. Now, yeah, this is our CEO. You can check them on LinkedIn if you're doing a deep analysis on that. It was founded in December 1982 with headquarters in San Jose, California. And this is their website. Employees is about 30,709. So let's come to the annual report for their income statement. We want to be able to ascertain, are they making revenue? That is the cocoa. Are they making revenue? Now, this is their quarterly report. In May 2025, we can see they made a revenue of 5.87 billion, which is about 10.62% in comparison with the previous quarter for May 2024. Then the operating expenses is about 3.13 billion with a net income of 1.69 billion. Now, this is what is important to us in the annual statement, the quarterly income statement, the revenue, and then the net income. Do you understand? That's our focus. Then from February, quarter has to do with May, August, November, February, March, and it rotates like that. Now, for February 2025, let's look at the revenue they had, 5.71 billion, and then the operating expenses about 2.9 billion. Now, let's compare something. February 2025 and May 2025, we saw an increase, 5.87 billion, and then February, we had 5.71. Did we increase? Yes. So they had an increase in the revenue. Then let's check the operating expense. For May, the operating expense is 3.1, and then for February, the operating expense, that's the quarter. Second quarter, the operating expense is about 2.93 billion. Now, net income, 1.81 billion, and then for May, 1.69. So there was a slight decrease in the net income. Now, let's look at their annual report. If they're actually making profit year in, year out. Now, this is 2024. They had a net income of 5.56 billion. And in 2023, they had a net income of 5.43 billion. We can see that there's a slight increase in their net income. While they made 19.41 billion as revenue, they used 10.41 billion to make this revenue, which is their operating cost. In 2024, the operating cost increased as the revenue. Now, in 2022, we can see that the revenue was 17, and then the operating expense was 9, and then the net income was 4. Now, notice that every year, the net income increases on a gradual basis, every year. So now the question to you is, are they making profit? Yes or no? So that's what we need to be settled on the income statement for this particular stock, Adobe. Now, let's look at the balance sheet. Let's look at the annual. In 2024, we want to be able to look at their total assets and then their total liability. In 2024, their total asset was 30.23 billion, and then their liabilities was 16.13 billion. And in 2023, their total assets was just about 29.78, meaning there was a slight increase in the total asset, and then the total liabilities 13.26, and then in 2024, the liabilities also increased. Are you seeing it? Then in 2024, the liability was still at 13.11 billion, and then total asset was 27. So in 2023 compared to 2022, we had a slight increase in total liabilities. Do you get that? So we can see that they had more assets in comparison to their liabilities. Now, there's a formula to know if a company is doing well using the current ratio, but we'll talk about that in another video. Let's just take this slow and steady. Now, for the quarterly, the cash flow, the annually, we want to be able to see if they, after all of the expenses, after all of the revenue, net income, do they have any money at hand? That is our focus. That's what we want to look at. Now, while in 2024, they had a net income of 5.56 billion. Yes, it's 5.56 billion. What was their free cash flow? Their free cash flow was 7.95 billion. You know, when you receive salary, you go to work, you receive salary, you pay your wife, you pay your family members, you pay your in-laws, you pay the landlord, you pay your bills, you pay your groceries. The amount that you keep for yourself and say, this one, I don't want to touch it. That is like your free cash flow for these companies. So that emergency money that you keep in case of incasity, it is termed your free cash flow. Now, for companies, they do that as well. So you want to be able to know if a company goes into problem, do they have the necessary liquidity to pay themselves? That's where free cash flow comes in. Now for 2024, the free cash flow for this company is 7.95. Then in 2023, free cash flow is 6.61 billion, fair enough. And then in 2022, 6.27 billion. Then in 2021, 5.78. So we can see that the free cash flow is steadily increasing. Then we can also check cash from operations, cash for investment, and cash from financing. But our focus on this video is just the free cash flow. How much do they have hanging? How much do they have floating? How much do they have in case of incasity that they can use to bail the company out? So with these 3 points that we've looked at in the income statement, the balance sheet, and then the cash flow statement, we can be able to ascertain that Adobe is a very good investment opportunity to key into. Now let's go to the chart and see on a technical perspective, are they really doing well? Now you can see from a daily perspective, you can see this is a support region. This area is a support region with the price currently at 347.19. It is a good steal. And then let's check weekly. It's a good steal. If we take a buy from this particular area, we could see nothing less than 48 to 50% this coming quarter, quarter 4. 50% free on Adobe Incorporation. So that's that for Adobe. Let's move on to the second stock in our portfolio, and that's AMT. If you're following up to this moment, type it in the comment section, AMT, AMT. Now, let's analyze AMT. What do they do? AMT, this is the about. AMT is simply American Tower Corporation. It is an American real estate investment trust which owns, develop, and operate wireless and broadcast communications infrastructure in several countries. It was founded in 1995. Number of employees, 4,691. The data is about as at 2024. Now the revenue, net revenue of 11.14 billion USD in 2020. So let's look closely at some of the things that they are doing. But before that, remember our trick. There's a trick we use to know if a particular stock is too cheap or too expensive for us to key into. You remember? Yes, it's called the 52 weeks high and then the 52 weeks low. We want to find out the 52 weeks high and then the 52 weeks low. Then we add both figures together and divide by 2 and compare with the current stock price. If the current stock price is below the average, then it is cheap. If it is above the average, then it is expensive. So, are we ready? Okay, so let's move on. Now, looking at the income statement, annual income statement, in 2024, we saw that the revenue for AMT, remember it's a real estate firm, REIT, R-O-E-I-T, Real Estate Investment Trust. So they are focused on real estate. Now, the revenue is 10.13 billion in 2024, and then the net income is 2.26. And then the operating expense is 2.94, which is quite low and favorable. Now, in 2023, they had a revenue of 10 billion and operating expense of 3.89 billion with a net income of 1.48 billion. Sizable, but very poor. Let's compare to 2022. 2022, they had a net income of 1.77 billion. So we can see from 2022 to 2024, there was a steady growth. 1.7, 1.48, there was a steady growth. However, it is not a sharp increase growth. Because in 2022, we had 1.7, and in 2023, we had 1.8. So the price dipped down a little, and then in 2024, I increased to 2.26. Now, let's look at the balance sheet and be able to see if there are areas we can be able to pin and see what their total assets are and then their total liabilities. Now, in 2024, their total asset is 61, and then in total liabilities is 51. For us, this is not really good for the company because the liabilities they have cannot be equal or close to the total assets that they have. You get? Now in 2023, you can see these the visuals, these colors. In 2023, total assets is 66 billion, and then total liabilities is 55. 2022, total assets is 67 billion and total liabilities is 54. So for me personally, looking at these, their balance sheet, it doesn't speak well. But however, let's look at other indicators and metrics. Let's look at their cash flow. Now in 2020, you see their net change, you see, and then their cash flow in 2024 is 4.37 billion. In 2023, 4.6 billion. 2022, 3.8 billion. 2029, 5 billion. You will see they are still struggling from 2022, 2024 to regain the free cash flow that they had in 2021 and 2020 altogether. So this shows that they are making progress, and then we can bank on this. By the time they get a free cash flow of 5 billion, which they had in 2021, you can be sure that the price would be reflecting the value that this current company possesses. So this is an underdog. It's very best for investors to key into this. There are a number of news surrounding this pair together. Now let's look at the technicals and see if it's a good fit for us. AMT, American Tower Corporation. On a daily time frame, we can see that there's a rejection at these areas. This is a support area. You can see that there's a rejection, and if price kicks in, we can see price move around 18%. 8% in this coming quarter. So this is a very good good opportunities for investors to key into the stock. Now, if this video is of immense value to you and you want more analysis like this for various stock, China stock, Indian stock, US stock, Nigerian stock, drop it in the comment section and let me know your thoughts. Thank you very much. Now, until we see again, stay profitable. This is Trader Kessie. Have a great day.